credit cards. So we talked about this a little bit last week at the tail end of last week. And I mentioned how I was just about to get an article up on ways to increase your credit score. We want to decrease debt, but increase credit scores. And so the more I thought about it, the more I decided this is really where we should go. So let's talk paying off credit cards, increasing credit scores, loans, the whole gamut. I actually have quite a bit of notes that hopefully we can hit all of this. We'll see how far we get. So this isn't a normal topic that we do. If you've got questions that are completely off topic, that is okay by me. Just leave them in the comments and I will see them. My husband will see them. Between the two of us, I will get you an answer. I am okay with off topic. So as we dive in, just ask away. Whatever it is, definitely on topic too is always great too. But it's a great topic to be hitting on because a lot of us are kind of hitting a point where you are starting to wonder, what are we going to be able to do? Are we going to be able to pay all the bills? How are things going to be changing? So hopefully you're not in a debt moment already, but if you are, let's talk about it. How can we get out? How can we pay off this debt and hit all of those things? So that's our goal across the board. In all of those topics, I honestly don't quite know where to start. What side of this should we start on? So I guess super fast, let's just hit on the basics of a credit card really fast. I am not against them. I know that Dave is and some other big guru folks that make a lot of money selling books telling you to not have them, but they're actually good. And in terms of increasing your credit score, they're kind of required. So to say we won't have one, I don't know that that's actually going to work in today's society. If you want to have a really great credit score, you do actually need a credit card, but you need to use it wisely. So no, I'm not saying let's all go and get $50,000 worth of credit card debt. No, but having one that you pay off every month, that you just use for a few things and pay off every month, or for you having them and paying off the debt, if that's the case, and then using them wisely, that's the only time that we want to go that route. So in terms of figuring out credit cards and everything that's there, that's what I want to start with. I don't want anyone to be attacking, saying, how can you recommend these or not recommend these? It really is that we all need to be, using them wisely is the by far best way to go on all of that. So I am getting a note that no one can see us on Facebook, and I'm not really sure why. So I'm gonna try to figure out what we can do here. Not sure what my options are, but we could attempt something, I guess. Try to see if we can go live and on the same computer in two places. It normally works, and for some reason it's not wanting to. Let's see. Oh, I see the problem. Okay, so sorry, YouTubers, hold with me for 2 seconds while I try to fix this. It looks like the API that's on the back end of everything isn't happy, so we'll see if we can get this to work. Okay, hopefully this is going to magically make it work on the Facebook side. Okay, maybe. Okay, so hopefully we're live now on Facebook. Thanks to the YouTube folks for hanging out there for a second. I'm going to restart us so it doesn't look weird for the Facebookers either. So it is Q&A time. I know I'm late on the Facebook side, so hopefully you guys haven't been wondering whether we were even having it tonight. Little technical difficulties on the Facebook API, which is what we talk to on the back end. So tonight's Q&A, to dive into it again, we are going to go credit cards, credit card debt, loans, increasing your credit card score. My brain tries to say it the other way. We want to decrease our debt and increase our scores. I'm going to try to hit all those topics. And seriously, guys, I have a lot that I'm hoping that we can get across. So starting 6 minutes late, not helping us too much. We were waiting because could kind of tell things weren't necessarily looking right. We didn't get too far. The big thing that I did cover so far really was getting you to realize credit cards aren't evil. I know that In terms of some of the big gurus that are out there, they tell you 100% don't get a credit card. Honestly, if you want to increase your credit score, they're kind of needed. Having credit that you're using wisely, not racking up a ton of debt on, but using wisely, is one of the best ways to show that you are responsible, and that's what increases your score. So you have to be okay with them and not have a we're never going to get this, or you're going to need to get creative and have some other sources of loans, because if you have no loans and no credit card, you have no credit history, you have no credit score. That's basically the whole game in how all of this works. So in terms of diving into this, kind of attacking that, the first place I want to go is what credit cards should we even look at? If you have a very low credit score, and you're thinking, you know what, I want to try to rebuild my credit, so let's try to get a credit card to rebuild our credit. There is an option. And I had someone send me a message after last week's Q&A asking about that. So in case anyone else has that question, there is something called a secured credit card. And if you're trying to rebuild your credit, if your credit score is kind of dismal or folks just keep rejecting you, first off, stop applying. So if you get denied from one credit card, you try again. Every time that you keep trying, those are going to be inquiries on your credit report. And every inquiry on your credit report is another ding. They're actually each bringing down your score. So don't keep trying. If various credit card companies are declining you, stand down. And then let's look at getting a secured credit card. So a secured credit card is actually not really a credit card. It's more like a savings account. If you look at it that way, you're putting money up front. They're going to give you a credit card, but you've basically secured. You've promised that you would pay the bill, and if not, they're going to use this money that you gave them if you don't pay the bill. You pay the bill, then they're going to hold on to the money, and it kind of becomes a savings account for you. The more you pay the bill, that's still counting, that's still showing up on your credit history, and that money is just sitting there. You haven't lost the money, but you're slowly showing, hey, I can pay the bill and I cannot rack up debt. I'm not going overboard here. Mind you, your credit limit on that card is whatever's in that account. So if you put $500 in a secured credit card account, you have a $500 credit card. So they're not going to give you $10,000 in a credit line because you gave them $200. That's not how it works. But that is a secure credit card. And it is a very safe way for someone who has very bad credit to start to rebuild your credit. So go that route if you can, and you're going to be at least starting in the right direction if you have very, very bad credit. So if you have pretty good credit, two things to look for in a credit card. Obviously, our goal is to pay it off every month. So APR-wise, that's not really where your brain is. Most of them are about the same anyway. But no annual fee, just hands down, no annual fee. And then the other thing is the rewards that you're going to get from it. That's really why we ended up on credit cards last week, because we were talking about rewards programs. So, to kind of flip that into this week, it really is coming out and just all around realizing that we want to focus on what we're going to use. So if I'm going to go and fly on an airplane, if I'm going to go stay in hotels, that you're getting that sort of rewards card that's going to benefit you the most. Cash back if that's what you want. So no annual fee. APR hopefully isn't going to matter because you're going to pay it off every month, and then just the best rewards that you can. So that's the basics on what to look for in a credit card. We're going to move on, unless you have specific questions on that, and talk loans and rebuilding your credit score and all the other sides to that. So as we dive in, again, if you have questions, just leave your questions in the comments, and between my husband and I, the two of us one of us will get you an answer. He'll make sure I see it if I didn't see it right away. So Matt says, more and more landlords and property managers are reporting on-time rent payments. which is great too. And that is definitely one of the things I was going to mention, Matt. There's also a way, and we'll stick this link in the comments, Experian particularly. So there are 3 credit reporting agencies, and Experian is one of them, TransUnion is one of them, and for the life of me, if I hadn't tried to think of it, I can't think of the third one. But Experian's the one that does this. They have something called Experian Boost, and you can actually link your checking account with Experian. I know you may not want to do that, but it's to help them see when you pay bills, and they give you credit on your Experian. It's not helping you on the other 2 bureaus, but it's helping you on your Experian credit bureau report, because they are going to give you credit when you pay your utility bill, when you pay your any telecom bill, so cell phone or landline. They're going to count that as paying your bills on time. So if you've got a super low credit score, what Matt's saying, having landlords and property managers reporting that you paid your rent on time, if they're willing to do that, that is a great thing. Being part of Experian Boost, which is free, by the way, plugging into that. So all you do there is you create an account through Experian, which is free, which is, again, one of the 3 major credit reporting agencies. You create an account through them, you link in your checking information, the information that you're going to pay those bills with, and then they watch basically for those bill payments each month, and they count them as being paid. So pretty sweet, and another easy way that you can be adding that onto your report, because if you can't get a credit card, then you feel like you're stuck. But now you're getting some good kind of bonus points for doing things that you should have been doing, and somebody's noticing, and that's a huge help. So big ways to help your credit score. Number 1 really is getting a credit card, having credit history. I don't have any score if I have no credit history. So getting a credit card, even if it's a secured one, if that's all that we can handle, it is a plus. Paying your bills on time, making sure you're getting credit for paying your bills on time through Experian Boost. And TransUnion and the other ones may also do something similar, but Experian's the one that touts their program a little bit more. I will tell you on a personal level, if you've never tried to set up an account with Experian or the other credit reporting agencies, be ready to just give a pint of blood. That's what both my husband and I feel, because they are going to ask a ton of questions to verify who you are, which is a good thing. It's meaning that your information's secure, hopefully. But seriously, we just had some troubles answering our own questions and ended up just very frustrated with them in the end. But it is helpful to have accounts with those credit companies, because you're able to look at your credit score every year. So I can pull my credit score from Experian. I can pull it from TransUnion. There is another company that you can use that actually will pull it from all 3 and give you your credit score. So that's Credit Karma. I'm going to put that link in. It's free service. They do have a paid version, but they have a free version that is great. I'm signed up for this, and with Credit Karma, that you get an email. It seems like I almost get them once a week lately, and it'll say your credit score's gone up, your credit score's gone down, and literally they're telling you that it went down like a point. Every time you pay a bill, like you pay your credit card off, we'll get an email that says your credit score went up because the amount of debt that you owed has gone down. You just paid your bill off. It's fine. You can ignore the emails if you want, but they're helpful if something big goes on, because Credit Karma or being part of Experian or one of the other companies is going to help alert you if something goes very wrong. So those of you who've been on Q&As for years, you may remember, and this has been a while ago, probably 3 or 4 years ago now, we went on a family vacation somewhere in Georgia, and my husband's identity was stolen. And within a matter of a month, these people had opened credit cards all over the place. We found out because we got a bill for cell phones that we didn't own. So through all of that, had we been part of something that alerted us back then, we would have found out faster, but we weren't at the time. So being a part of something that's going to say, whoa, all of a sudden your credit score's gone down because you just opened 10 credit cards on the same day would have been great. And those systems are free. So be a part of them. I'm not saying that being a part of them is going to raise your score, but being alert of what's going on is a huge way to raise your score, because you can kind of nip it in the bud, if we want to go Barney Fife there, and we can make sure that we catch it and we stop it. There are ways to deal with that. For him, he had to put a freeze on his credit for quite a while, and report all of it as fraud and deal with all of it from there. So thankfully it was all dealt with. We had no liability on it, but it was frustrating, and it did do a number to his credit for a little bit until it was all solved. So check them. You can check your credit score with each bureau once a year for free. So don't not check them. It's completely free once a year with each bureau. Credit Karma also has a free version. That's what I'm recommending. That's what I use. We don't do a paid version of that. And really, you could go completely into getting, identity protection and all of that too. There's a lot of places that are offering it completely free, by the way. So I don't know that you need to pay for identity protection. I know for us, the state of South Carolina got hacked, so they offered it to everyone for free. I even want to say Allstate right now is offering it completely free for the next few months for everyone, not even Allstate users, but for everyone. So if you are wanting something that's true identity protection, you could go that route. So Latasha is asking, how do you raise your credit score? So each of these little things, Natasha, is going to be that help. The number one way to raise your credit score is paying your bills on time. The second biggest way, though, to increase your score is related to your credit ratio. So let's go math here for a second. But if I have two credit cards that both have a limit, let's go big and say they both have a limit of $5,000. So I have $10,000 of credit available to me, but I'm only using $200 of that. Then my ratio of debt to available credit is actually great. I have a huge amount of available credit, $9,800. I'm only using $200 of that credit. I am not a high risk. So if your ratio, though, is way out of whack, I've got $10,000 available to me on those two cards, and I have $9,400 in debt on those two cards, then the available credit that I have left is only $600. That's a really bad ratio. So what they're looking for, the magic number, no one really knows exactly what it is, but most folks will say it's about 35%. So if you carry about 35% of debt versus 65% available, that is going to help your credit score. Keep in mind, anytime I purchase something large on a credit card, and yes, you're going to pay it off at the end of the month, it still technically hits the credit report. The credit report sees that you have a $2,000 purchase. Even if you're going to pay it off at the end of the month, your score will come down a few points until it's paid off. So that's how, I guess you could look at it, as how big that debt to credit ratio can affect you, because it affects you even mid-month. But that's a huge one. So in terms of that debt to credit ratio too, this does not mean that you should go out and just open a ton of credit cards and not use them. But it does mean, and this is one where I did this wrong a number of years ago. When my husband and I first got married, I insisted on calling credit card companies and telling them that I wanted them to no longer offer credit increases, because I really, was wanting us to be wise and to not use a ton of credit cards at all. And we never ran up credit card debt. But I didn't want the ability to do that. In reality, if they want to raise your credit limit, you just don't act like it exists, and you're okay. They're offering you more credit. You're not going to use it, and it is in turn going to help your credit score. So you don't have to go to the point that I did. That was a number of years ago, but it is hopefully a help. Okay, so to keep us going, a few other ones. Another really big one, and this is easy. This one doesn't require a lot of work, and this is one I also mentioned last week, is you never want to close your oldest account. Whatever that oldest account is, And you can even, you're allowed to pull your credit report for free from each bureau once a year. So pull it, figure out what that oldest account is, and do not close it. The reason for that is the length of your credit history. So if I close the oldest account, my credit history just got a lot shorter. That whole card's just gonna fall off. It'll act like all of those payments you made on time, all that, juice that you earned, good score juice, if we wanted to call it, is gone as soon as that account is closed. And that hurts. So don't do that. Definitely not if that card you've been paying off and you've been doing great with it. Never close your oldest account. All the accounts between that oldest and the top, they don't really they're good juice. If you've been paying them off, they're counting for you. But that oldest one is the most important on your credit score. Now, a question I got last week after the Q&A on that note, and someone may have even asked it during the Q&A, is what happens if that card changes? So, and we've had this happen to us, a credit card that we got that had no annual fee, then sends you that, we now have an annual fee letter. So what can I do then? Because I don't want to keep paying an annual fee, but I don't want to close that account either. And that is a very tricky position to be in. You can try to call and see through their customer service what your options are. See if there are some perks behind that annual fee that may make it worthwhile in keeping. Potentially though, hopefully when you first open the card, it was never a card that would have thrown in an annual fee. But if not, you're going to have a decision to make there. And, credit companies aren't known for just bending over backwards to make everything easy for you. So it may really come down to you deciding, how much older is this card from the next card that we have or from other accounts, and you may be okay. But on that one, I wish there was a better answer. Hopefully it won't happen, but we don't want to close it. So Cher's got a question. How do I dispute something? Apparently one company account said that you had 2 late payments in 3 years. Years ago, you closed the account, but now their record said that you lost your job, which is not true. So what you're going to do, Cher, and it depends on what account that it's on, is pull your report from each bureau. And this is really for anyone. Pull your report from each bureau. Again, you're allowed to do that once a year from each bureau for free. Pull it. Look at what's on there. If anything is not right, anything, and what you've mentioned are great things. Late payments that you didn't make late. Or that you've lost your job, but you haven't lost your job, or anything that is off. There are dispute forms on those credit bureaus' websites that you can fill out. You have to fill out the form. You have to send it in to them. And you kind of go from there, and they're going to call you. Again, you're going to feel like you're giving out a pint of blood and verifying who you are and that you have the right to make these changes. So just go ahead and, quiz yourself on every past address you've had in the last 20 years. That's what got us, was trying to remember everywhere we had lived and getting the addresses correctly. That's just life. But have that handy, because they are going to ask you a ton of questions, because it's legit. I don't want someone to have the ability to come in and change my credit report on me. I know that's my job, but it is hard to remember all the answers. So you're going to fill out the form. You're going to send the form in. They're going to call you. You could call them if you wanted as well. And it'll just go through that process of getting it fixed. Depending on what the errors are, you may have to show proof. They may want to see your last pay stub or your 1099 or W-2 at the end of the year that you really did have a job. And my husband's chiming in and saying that he recommends having all those passwords and PIN numbers in a hard paper notepad that you keep somewhere safe. And actually, to take that one step further, we wrote a post on this sometime last year, but I just reshared it or stuck it into our queue to reshare on social media, so it may not have gone up yet. But one thing that actually every family should have is an emergency binder. It's a great way to look at it. It doesn't even have to be big, but an emergency notepad. It could live in a fire safe under your bed. but having in there, bank account, passwords, PIN numbers. This isn't something I want to just leave lying around the house, but it is something that I want to be able to have to where if my husband died tonight, I don't know all those numbers. He's the one that's in half of the accounts. I know some, he knows some, putting them all in one place, and going ahead in that same line, this is totally off topic, but in that same line, also putting in, life insurance policies, having all of that in one particular place is huge for just taking stress off of people in a time when you may not be there to help them figure out these PINs and passwords and everything else. But writing it down for yourself, not on a computer, not going to help you there, and not really super safe, but on a hard notepad, as he's saying, like a legit piece of paper, and then sticking it somewhere safe is a really good idea. Okay. And then Cher says, can I recommend actual advocates to help you correct? There are folks that make a living doing this, Cher, and in terms of that, I don't want to point towards. It's hard. There are a lot of folks that they're really there just to kind of take your money when it comes down to anyone that's like credit consolidation, anyone that we're seeing a commercial for on the TV. I wouldn't really point you in those directions. What I would do is let's look at potentially even going through like Dave Ramsey does have his Financial Peace University, but he also has financial counselors that have become certified through him. I mean, I may end up more recommending you go that route and see if those folks have any experience in directly helping people deal with credit report issues. Sometimes they do, sometimes they don't, but it at least could possibly help you get in the right direction towards someone that's in your area, because they're all over the country. So going through Dave Ramsey's route might be your best option in a more legitimate sense versus just Googling it, because what you find isn't always great in that system. Let's go through a few others. So I mentioned inquiries earlier, and like if you're trying to get a new credit card, that we're not just out there constantly trying to get every new credit card that we see and they keep declining you. Every time that you make an inquiry on your credit report, it counts as a ding. It does remove points every time. And you may be surprised what actually pulls your credit report. If you get a life insurance policy, they pull your credit report. Some even car insurance policies pull your credit report. Honestly, if somebody asks for your social security number, you need to ask them why. Because odds are that's why they want it, is to do a credit report on you. If you're looking at getting a house and you want to find a mortgage lender, well, going to multiple mortgage lenders is going to cost you. It's going to pull your credit report on each and every single one of them. So before you hit the point that you're ready to dive in, you need to have already kind of compared these people. I want to get their rates. I want to get all their fees, all of this before we hand over social security numbers. If they won't talk rates, and yes, the rates can change based on your credit score, but if they won't talk basic rates to you without your credit history, move on, because every time you get dinged by every single one of them. And you want to make sure that you're getting the best rate, so you want to be a smart shopper, but smart shopping ends up costing you. Now, there is a help there, because if there are multiple inquiries in a short amount of time, a lot of times the credit reports will lump them together. So let's say that we did go mortgage shopping. We did those inquiries all within a 4 to 5 day window, and we did a number of them, but within a 4 to 5 day window. It's not going to hurt as bad as you and your husband talked about buying a house, and so you got a mortgage pre-approval, but then you went and you didn't really do anything with it for 2 months, and so then you had to get another one. That isn't pleasant. So, trying to keep tabs on all of that is it can get tricky, but I just want to keep them as close as I can, so that I'm not going to mess them up by doing lots and lots of inquiries together. Also, one other thing on inquiries is to realize that even your work can pull your credit report. So anyone that has your social, this can end up affecting you in the end. So you don't want to get hurt too much by that. And then the last one, so these are all technically, and I don't know if my husband stuck the link in or not, but these are all actually in a post that we put up last week. So you can read over that too, or if you jumped on late and you didn't catch any of them, these are 8 ways to increase your credit score. I keep trying to say it backwards. But all of these are right there in that post. But the last one is having multiple types of credit. So as we talk credit cards and paying them off and paying them on time, having a mortgage, having a car loan, those actually do increase your score as you pay them over time. So, I'm not saying that we need to go out and just get every loan known to man, but if I am trying to increase my score, owning a house, showing that you're paying off the mortgage over time actually does help you. And multiple types of credit, that you're using them wisely. Those are the big things that they will say go into a credit score. There are probably a lot of other little things that are behind their algorithm as well, but those are the main ones. So hopefully those will help a little bit. I want to move and talk loans, and if you've got questions that I haven't hit, please leave those in the comments too. If someone's commenting on the Twitter side that this system can bankrupt you. I would agree. If you're not going to pay your credit cards off on time, if you're not going to be wise with them, just because someone hands you a piece of plastic doesn't mean that I have the money that is behind this. I have to be able to pay that bill off at the end of the month. This is not pretend money. It needs to be real money, and you need to treat it like a checking account and not like a loan that I just get to go and spend on anything. If that money is not in your checking account, then we aren't buying anything with this card. So we are not going to go and grab things that we can't afford. And that has to be the mindset. If you're already in a ton of debt, maybe that's the question, is how in the world do I get out of a ton of debt right now? Then what it could end up being for you is that we go ahead and we lock them up, or honestly cut them up. Now, I'm not telling you to close the account. Cut them up. When you're ready, when you've paid off all the debt, you can just call them and say, hey, I lost my card, and get them to send you a new card. But cut it up for now, and you won't use it anymore. You don't have the card anymore. Or if you need to just change the card numbers, call them, tell them you lost your card, get new cards sent to you, and cut those up. Because now the old card number won't work. So if you're still having someone over here using it online, that's a great way to stop it being used. Cut up the new card that comes in. Nobody can use it now. Pay off the debt. When you're feeling more secure, get a new card. So hopefully that would help a little bit. And put them in the freezer, stick them somewhere so that you can't use them. That's a great idea too, Larry. It's just making it where you're not going to touch them. So honestly, cutting them up is the easiest because you can't. You don't even have the card anymore. You've destroyed the card. You still have the account. We haven't closed the account. We're just not telling them that we don't have the card. And then when you are ready to get a card back, you've paid off that debt, calling them and saying, hey, I've lost my card. Will you send me another one? Yeah, you did. You lost it in the trash years ago. That's probably the way to look at it. But hopefully that helps. So handpicked child is saying, is it worth disputing inquiries or just let them fall off? So if they're legitimate inquiries that you've made, then there's nothing to dispute. If you feel like people are making inquiries that you did not authorize, and you feel like they are, if you're trying to get a mortgage and you feel like they are bringing down your number, then yes, anything that's incorrect is fine to dispute. It's going to take time, but go for it. This is your credit, and if you can keep it crystal clean, do it. It's not going to hurt you at all to do that, and to sit there and get frustrated. And so I just saw my husband comment back as well to you that it took 3 disputes. Macy's was the most difficult to get something removed that we didn't do. This was fraudulent use, and they were just refusing to take it off of his credit score. So you should. This is your credit score, and you protect it as best you can, I guess. So if you are going to pay off your credit card bills, hopefully if you have them, This is another one where Dave and I seriously disagree. I get debt snowballs. I get that, paying off the smallest amount gives you excitement to keep going. But seriously, you are just paying interest you shouldn't be paying. So always paying the highest APR first is costing you less out of pocket. If I've got a credit card with 27% interest versus a credit card with 17% interest, that's a huge difference. Pay the highest APR first. Obviously, make the minimum payments on all of them. Don't not pay anything, but pay extra. Let's pay off the highest APR first versus doing the debt snowball thing, which is Dave's way, and we're going to pay the smallest one, and then we're excited that we paid the smallest one off, and so we're going to pay the next one. I get it. But financially, it isn't the smartest advice. You get rid of the one that costs you the most money first. Now, another big question that I get from folks, should I take the debt that we have and roll it into, refinancing the house, a home equity line, any of those things? No, you shouldn't. I mean, possibly this could help you if you're totally underwater, but it's really a bad idea. Here's why. And in general, credit card debt is unsecured. And I don't want you to take this advice the wrong way, but if you don't pay this bill, they don't come after your house. There's nothing behind it. Like, they gave you this, you don't pay it, they're going to hound you for the money. Yes, they're not going to just give up easily and go quietly into the night, but they're not going to take your house. If I roll this debt into my mortgage is a secured loan. That bank, if you don't pay it, they will take your house. That loan is secured by the home that you are living in. So if things are crazy upside down for you, and you decide that you're going to pay off debt by rolling that debt into your mortgage, but things don't get better and they stay crazy upside down, you're going to lose your house. And that's a really rough place to be in. So most people would not recommend taking unsecured credit card debt and rolling it into a secured loan, meaning you're going to lose something if you don't pay this. Unsecured debt, it's going to affect my credit score. I might have to claim bankruptcy. I might have to fight them and pay minimum payments forever, but I am not going to lose my home because I didn't pay it. And that's a huge one. So I'm not going to say that, that you should never roll them into loans. It's just really, really risky to do that. Because here's the thing, something got you into credit card debt. There is a reason, whether it was that you weren't using them wisely, you had a ton of medical bills, the car kept breaking down. There's a reason. So until that reason is solved, that debt's not going to get any better. It's just going to keep growing. We're going to pay off these cards with this loan, and then what's going to happen? Are we going to stop using the cards? So you have to address all factors before you're going to roll credit card debt into a mortgage. You need to make sure you have dealt with why you have debt in the first place. It scares me. The idea of that fully scares me. So I would not, I would never recommend it, though. If you are to where we just really need the monthly payments to go down, that is an option. But here's an easier option. Before your credit report is getting hit, if you feel like this month, for example, is a great time to be discussing this particular one. If you're feeling like, we haven't had a paycheck in 4 weeks, things are not going well, and we are not going to be able to pay even the minimum balances on these cards, then you are kind of at that cusp. This is the time before your credit score gets hit to get a credit card with a 0% transfer rate. They do exist, so Google them, 0% credit card transfers. They'll offer that 0% rate for usually 12 months. So I can take the debt from this card and I could transfer it to this card that has a 0% APR. This one had an 18%. Now the goal in doing that is to still pay this off, but I've taken away the interest for the next year, which is huge, and given myself the chance to pay that off. So that's where I would get you to start. Now, if you're already to the point that you're looking at taking out a refinancing loan, you probably have a lot more debt and a much bigger problem. But going with a 0% transfer is a great starting place to try to get ahead on the bills, because minimum payments, you're never going to get ahead. I mean, your new credit bill, well, it's not new. They've been doing it now for I don't even know how many years. How they tell you if you pay the minimum amount, it's going to take you 47 years to pay this off, or whatever it says. Yeah, don't do that. But if we've hit the point where we can't even make minimum payments, then we got to do something. And that's the goal, to do it before you end up having a ding on your credit score. Because once I do, it's going to get really hard to get that 0% card. That's why I'm saying, like, that's your first line of defense. Jessica's saying, what about debt collection? So you are going to get sent to debt collect. They're not going to give up quietly. If you decide to not pay this, they're not going to go quietly into the night. They are going to hunt down and try to get that money. And eventually for you, it may be that you do, it depends on how seriously in debt you are. But you can work on consolidation. In the end, their goal is to get paid. So if you're so overwhelmed on payments, then they will work with you. And it's not going to be, oh, we'll just forget that you ever used it. But they will work with you on payments that you can handle, and hopefully kind of getting some of that to where you can make those monthly payments. One note on this, I find a lot of folks that end up very underwater because of medical bills. And I've mentioned this on so many Q&As through the years. Hospitals get very, very pushy that you need to pay them. But as long as you make a concerted effort to pay them, you're good. They do not have to have a set amount every month. They're going to want it. They want a pushy payment plan, but you keep paying what you can handle per month. If you can't handle the amount that you owe the hospital, if I can't pay that this month, do not put it on a credit card, because you won't be able to pay it at the end of next month. You want to keep that loan with the hospital as long as you can keep it with the hospital. Now, some hospitals do send you to debt collection. A lot do not, but some do. And if you've hit that point, then you're going to have to deal with it a different way. But you want to keep that loan with the hospital as long as you can, because they don't charge interest. 90% of them don't anyway. Now, hopefully you didn't manage to find the worst hospital in the world, but most of them do not charge interest. So you just keep paying that payment. But the minute I move it to this card, I couldn't afford it, so I put it on this card. I'm not going to be able to afford it at the end of the month. And now it's going to have some crazy interest that the hospital was not going to charge you. So just across the board, huge advice with medical debt there. Another big one on medical debt, because that really is what a lot of people end up just all of a sudden you're just drowning, and it wasn't because you went out and had a great time. You didn't get anything magical for it. That's what I felt like telling my husband, I did tell my husband last year. I had to have my appendix out. I ended up back in the hospital with a pretty bad infection. And between all of those bills, you know what? It was over $6,000 worth of bills. That was our deductible for all of our health insurance. I'm like, you know what? I didn't even get to go on a trip. I just got to go into a hospital for a few nights by myself and eat bad food. If I have to blow $6,000, I would have preferred to have had some more of a fun souvenir than a few scars and no appendix. That's no fun. I get it. But be smart with how you deal with the debt from it. So do not put it on a credit card. Keep it with the hospital as long as you possibly can. As long as you're making concerted payments on it, they can't say you're not paying. You are making an effort on paying that amount down, then you're making a payment. And there's not much they can do there. If they did try to send you to a court to get the payment, whatnot, you're making payments on it. And they know that. They don't really want to be the bad guy on this one either. So Mandy's chiming in and saying our hospital system has a payment plan with a 0% interest for 18 months. So that's usually where the hospitals want to be. They want to be the good guy because they really want you to come back and to get more things with them. Even though you're massively in debt because of them, they want you to bring your kids there, and every little thing that you need, they want you to come to their hospital for it. So they're going to try to not be in that realm. Jessica's saying, my husband got laid off and then ended up in heart failure. and insurance from his new company didn't start until 3 days after. That is massive payments. So Jessica, in that realm, next time, this is so hard. That's a hard place to be in. If you ever have a lapse in health insurance, always paying to Cobra is wiser than finding yourself in a hole with no insurance. And in that boat, there isn't much that you can do. You can try to see what the hospital would do on, being a cash payment, on even just wiping the debt. And honestly, that's what some people end up doing. I had a very good friend who had twins back in the day when my twins were little. Her twins were in the NICU for 3 months. And the bill for them not having insurance was a few million. There was no point that they were ever going to be able to pay that off. And so for them, filing for bankruptcy was the only option to be able to come out from underneath that. I'm not saying that's where you are, but there are folks that end up in that position, and I get it. So medical debt really is what undoes some folks. Okay, let me make sure I'm not missing questions other places. I'm trying to keep tabs on things everywhere. Facebook, because you guys started late over the YouTube side, it's not pulling all into one place for me today. Okay, so one thing I did want to hit on was refinancing loans and home equity loans, not necessarily for credit card debt, but maybe you're just kind of thinking, you know what, I don't know that we're going to be able to even pay all the bills right now. Should we refinance? Should we lower our mortgage payments to make this easier on ourselves? So mortgage rates have not really changed much through all of this up and down. I mean, markets are flying up and flying down one day, next day at a different direction. Mortgage rates actually are not adjusting that much. They're pretty much staying the same. So if you are pondering getting refinanced, it's not going to be this has got to be amazing because the market's down. It hasn't really changed that much. There are some folks that are saying it probably will come down in the next month or 2 months, but I don't know that you want to hold out. I would say if you need to refinance, if you feel like financially that's going to work out, the rates are what they are. So what you can use though, and I'll stick a link in the comments for you guys, there's a really good, easy refinance calculator that is on NerdWallet. There's a number of them and you can just Google refinance calculators. But with a refinance calculator, and I'll show you my screen just so you can see what I'm talking about, you put in a number. So what was your original mortgage amount? Let's say it was $150,000. And then your original mortgage term, and it's going to tell you in the end what your payoff was. So let's say you got a mortgage just a couple of years ago. The mortgage rates have been low for a while, and we'll go 2014. I don't know. We're making up numbers. We want to stick with a 30-year if our goal is to keep our payments low. And there's the current interest rates, I'm going to guess, if that's what it's sticking in. So it's a little lower than your current one. Then it's going to spit out some options for you. You should refinance, and it will tell you what you're going to get. So I'm going to save $145 if I refinance. Now, this is factoring in that you potentially have you have equity. You've been paying off your mortgage for a certain number of years. There are a few other reasons that you may want to refinance. We've talked about this one in the past, but if you're still paying PMI, which is mortgage insurance, if originally when you got your mortgage you didn't have 20% in equity down, then you have to pay PMI. Well, if you have achieved 20% equity, you've been paying your mortgage over time for 10 or 15 years, you definitely have it, then refinancing would help to remove PMI for you. It would lower your monthly payments, but the payoff needs to factor in a few other things. And so this is where, these calculators are going to help you. Let's say that you are only going to stay in the house for a couple more years. Well, having a lower monthly mortgage payment for a year isn't going to do you any good when you factor in the closing costs of the loan. They even have to have appraisals and all of that. So you need to really think about all that. That's why I would say let's use a refinancing calculator to decide, where are we? Is this going to save me money? Is this not going to save me money? Is it worthwhile? I am not saying that we're refinancing to roll debt into the mortgage. I'm just saying if you're trying to find some extra money right now, that refinancing could be one of those ways, just use a calculator to help you be smart on that decision of whether or not it's a good decision for you. And it's not because rates have gone super low. It's more just because you've got some equity that you can take advantage of and then extend your payments out further. That's the hard part, though. If you wanted to be wise, the super wise way would be that you refinance, hopefully to a lower rate than you currently have, but a shorter term, so that you're not extending your mortgage payments out, even more into retirement. But if the point is to lower costs right now, if you have like zero costs, you've got a ton of debt, if you're Jessica's boat, you're just trying to pay off that huge hospital bill, then reducing my monthly mortgage payment would give me more money to pay towards that. Maybe that's the route you go. So use the calculator. It is going to help you. The other one that folks will ask about is, what about a home equity line? Just one thing to realize on home equity lines, they have a higher interest rate than refinance mortgages do. It's basically a second loan. And so because it's a second loan and it's not necessarily as secure as your mortgage is, because when it comes down to it, if I stop paying my mortgage, the bank's going to take the house, but the home equity line, they get kind of left out to dry. If the bank, can't recoup the cost of the mortgage loan, they really can't recoup the cost of the home equity loan. So it's a higher risk for them. It is a higher rate, and it's not going to be pretty in the end. Not the best way of finding cash, unless the rate that you're looking at through a hospital or through a credit card is super high. A home equity line could be a lower rate, but it is still a secured loan. It is still going to affect your home if you don't pay it. So still getting into that, don't turn around and pay a home equity line. Don't pay credit cards with a home equity line. Don't pay credit cards with a refinance either, because you're still putting unsecured debt into secured debt, and that's a scary place to be. Let's see. So would having, and as you were saying, would having a credit line, home equity line, be better than a mortgage? So if you don't have anything, Miss J, let's say you've completely paid off your home, you probably would want to go with the home equity line. If you needed cash, you'd probably want to go with the home equity line versus a mortgage for a couple of reasons. A home equity line does not usually have the closing costs related to that would be there with a refinance. So a home equity line really is, you've gone to the bank and you've gotten a loan. And the bank's going to have some paperwork. They're going to need to make sure your house is legit. They're going to want to see how much debt you have on your house. But if you don't have any debt on your house, you wouldn't want to go and deal with the closing costs and the title insurance and all of this that's going to be behind actually getting a mortgage. You would want to just deal with the home equity line. So that's if you were zero debt, though, right now on your home and you needed some cash. That would be an option to go and do that. So hopefully that answers your question. I'm not sure where you are in terms of finances, but hopefully that helps. Okay. Let's see. Yeah, and Tina's saying credit will put a lien on your home if you don't pay the credit card bill. So they will try, but even when it comes down to that, Tina, you might have a lien on your home when it comes to, trying to sell your home, but they can't take your home. And when in the end, the bank is the one that owns your home, and the bank could care less that another bank wants money from you. They want money from you. And as long as you're paying your mortgage, then this bank is actually kind of happy. So the lien on your home is going to stop you from being able to sell your home, but it isn't going to kick you out of your home. And that's the big part about not putting unsecured debt into secured debt. As long as you're paying your mortgage, you're in a pretty good spot. So that's where most of us want to be. So just trying to, keep the debt separate in a sense, not rolling them into the house by any means. Okay, so to jump into a few other things, let's say that you're actually in not a horrible spot. So how can we pay off some debt? And no matter what that debt is, if it's any sort of loan, if it's a credit card, if it's a house, the same rules apply. As I was mentioning earlier, always the highest APR first. So again, if I've got a mortgage and a credit card, your mortgage is a flat rate, always the same. That credit card is going to be higher. We'll pay the monthly payment on the mortgage, but not necessarily extra on your mortgage each month. anything extra is going to go over here. It's going to go to the credit card debt. Anything extra that you have, even at the end of the month, you have gone through and you have put your money in savings and you've tithed and you've done what you can do. Anything extra doesn't go to coffee at Starbucks. It's going to go to debt. And that's where you need to be, is on a debt diet, basically. And I know it's crummy and it doesn't feel very fun, but the fun part is when you don't have the debt anymore. So that's where you all need to be. Everybody needs to be in the same place in the household. You know, goodbye Old Navy, hello Goodwill, whatever it is to get you there. Cutting them up, not using them anymore, all of those things need to be factored in. But paying them off and putting anything extra towards them, because minimum payments, it isn't going to cut it. You're never going to pay them off. If you are in a ton of debt, you're not going to pay them off literally ever. So you've got to pay a little bit more. Dave would say you pay the smallest one first and then you move to larger. You pay the largest APR first. And I would say you still go ahead and work on one. So maybe they all have the same APR. We just work hard on one so that we can see one going down. Then we work really hard on the next one. We're still paying the others, mind you, but we're working hard on that one first so that we can still see some change, some effect to all of our work. That's the goal. And another option too is if you get paid twice a month, so as the money comes in, we deal with it then. We don't necessarily wait and pay it at the end of the month. We pay it when the paycheck comes in. It's kind of like how if you had extra, people always say you should pay yourself first. You should put your money in savings first. Same exact thing. As soon as that paycheck comes in, we go ahead and we make a payment to the credit card company, and we make another payment when the next paycheck comes in with every pay period. This actually will help you balance your budget a little bit better, because instead of having this money come in, it sits there for a bit and you forget that you owe it to people. You're going to keep having it come in and keep having it go out to where you realize, oh wait, we are broke. It wasn't a figment of my imagination. But seriously, it's going to help you pay it off faster, because paying 2 payments a month means at the end of the year, you've made a whole extra payment. So this is what we do with our mortgage. As we're discussing credit card debt tonight and credit scores and all of that, we don't have any credit card debt. So I'm helping you in ways that thankfully I am not having to apply. So I guess be open and honest. It doesn't mean that I've never not had a credit card bill that I couldn't pay, but currently we are thankfully not there. We pay our credit cards at the end of every month. Our debt is in a mortgage. So we pay our mortgage twice a month. Every pay period, the mortgage payment is made. At the end of the month, or end of the year, we've now made 26 payments because we get paid twice a month. 26 payments, well, that's basically 13 months when you put them back together. And there's only 12 months in a year. So you've made one extra mortgage payment a month. And in doing that, for most people, one extra mortgage payment a year, most folks on a $150,000, $200,000 loan, whatever you might have, you're talking about reducing the life of your loan by up to 5 years, depending on when you start making that extra payment. That's huge. And all it is for us is not necessarily adding to the amount that you pay, just paying it with each paycheck, a half payment with each paycheck. The only thing you need to check with your mortgage is that they are applying it correctly, that they are either holding one or that they're applying it automatically and then they're applying the next one, so that you're not still paying the same interest that you thought you were paying down early. But you will definitely be able to work that faster just with one extra payment a year, and you're good. Jessica said, I've heard you should carry a 30% balance on your credit cards. Jessica, what they're looking for is 30% or less, but there is no ding on your credit report if you have zero balance on your credit cards. So when you use a credit card and your statement is printed and mailed to you, they will actually report that to the credit bureau then. So if I were to pull my credit report towards the end of the month, it might actually say that I have $800 in credit card debt, but I'm about to turn around and pay that off. Now, that may sound like a lot to you guys, but we make all of our purchases on a credit card and we pay them off at the end of the month. So gas in the cars, which hasn't been much lately, but groceries, all of it goes on a credit card, all of it gets paid off at the end of the month. But that still hits the credit report as credit that we're using at that point. Then the next month it gets entered as zero when that payment comes through. So they're not looking at that. They're just looking at that ratio. So it's your debt to credit ratio, and they're wanting you to be 35% or less, meaning that I hold 35% debt to 65% still having available as credit. So if I have a $10,000 credit limit, I'm only using $3,500 of the credit card. You're still technically in a good place in their book. That would still be a really hard payment to make at the end of the month. I don't know most of us that could make that. So you don't necessarily want to be there. You want to pay this off at the end of the month. It is not going to ding you at all to do that. Okay, so one other question, a handpicked child says, I'm in the market for buying a home. Before I go bouncing around to different lenders, I'm trying to bring my credit score up. All I have is student loans and no credit cards. You have hospital bills less than $1,000 and a car loan. What is there for me to do to bring it up to move closer to buying a home? So if you have no credit cards, it actually is probably to get a credit card. And it is going to be a ding. It is going to be an inquiry, but you will see the score. I don't know how close you are to wanting to buy a home. If we're talking about, if you've got a good 3 to 4 months, getting a credit card now, it'll come back from that in 3 to 4 months. It's not going to come back from that new credit card within a month. So you are going to need to give it some time. But what's going to happen is that you're going to get the credit card. You're not really going to put a lot on it. You're just going to use a little bit. You're going to pay it off at the end of the month. And you're going to show that now I have more credit available to me and I'm using less of it, because that's the big thing. The credit that you just listed is you have loans, but they're probably a higher debt to credit ratio. So if you have a car loan and you still owe $4,000 on it, well, if the original balance on the car loan was $6,000, that is, you still owe over 35% of that debt. Do you see? Hopefully that makes sense. So getting the credit card, not really using it, is increasing your credit availability that you aren't using, and thereby, in the end, 3 to 4 months down the road, increasing your credit score. You just have to be smart and not use it that much. Use it a tiny little bit to show that you're making the monthly payments. We don't want to not use it and then not show that we're making monthly payments. It's all part of the game. But we do want to use it a little bit. Get those little green boxes for paying it off each month. That's what it looks like on your report. And it's all going to help out. But that is if you're 3 to 4 months out. If you aren't 3 to 4 months out, you may be a little tight to be making some major changes and bringing up your score, because you really need some play time to be able to have a chance to get your score to go back up. Let's see. I'm trying to keep, you guys have some great comments tonight, and thanks for all of you that are sharing kind of where you are personally. I know it's actually kind of hard to share personal information, but I will tell you this much. You putting in the comments where you are personally or the struggles, it always helps other people. They may not even comment on it, but when they see, you know what, I'm not the only person that is drowning in medical debt, it's an encouragement to them to know that they're not alone, to not give up, that there are other people that are in their boat. So thank you guys that are, stepping out of possibly your comfort zone and sharing a little bit more than you would normally share. It is an encouragement to other folks. Okay, so Miss J says, I'm looking to find a credit card that offers hotel perks, free nights for when we can travel again, recommendations. So it depends on where you stay normally, Miss J. If you have a hotel chain that you regularly stay at, but there are some good ones. I can tell you this one because I have it. But Marriott, with their card, there is an annual fee. I will warn you there. It's a $99 annual fee, but you get 2 free nights in any hotel. So it kind of pays for itself in that end. But it does come with a chunk of free nights towards reward status. And that's really what you're going to end up with. It's not necessarily that it's going to give you free nights just because you have the credit card all the time. And the annual fee is what's giving you the 2 free nights. But it's more that it's giving you, so this one I think gives you 15 free nights towards reward status, so that you're automatically, I don't even know what they make their levels now. They just renamed them. But it used to be you were automatically silver, and then you earn points faster. Pretty sweet. So what I would do is look at the chain that you normally stay at for hotels, Miss J, and say, okay, well, if this is where we normally stay, then how can I earn points faster? Having the card and using the card is definitely one of them. Moving higher up in their rewards program is also part of it. So it's putting the two programs together. And that's why I would say you want to look at where you normally stay before you decide to make some changes. Option 2 is not go specific to one hotel, but going with like a Chase card. Chase has a Chase Ultimate Rewards. It's one of the best rewards programs that's out there that's not branded. So looking into that one before you made decisions. Okay, so hopefully this helps a little bit. And everything. We've hit a lot of things tonight. I know we're over on time, but we also started a little bit late. This is definitely not a topic that we talk about every single time. I don't know that we've ever covered this topic in particular, but hopefully in talking about it all, for some folks, hopefully it's helpful just to see that other folks are in the same boat. But if anything, just getting some ideas of how you can be making some changes and bringing up your credit score. Bringing up your credit score, guys, too. You may not realize this, but having a good credit score actually lowers your car insurance, your life insurance. Those rates are tied to your credit score. So having a good credit score, not only does it mean you're, hopefully not in a ton of debt, but in the end, hopefully it's going to reduce some of the other bills that you have to pay, which is pretty sweet. Lynn, great tax question. So Lynn says, how are stimulus checks going to be handled next year when it comes tax time? So this is one that they left kind of blurry, but this is what it looks like. So the stimulus check that came is technically a credit that you are getting. It's going to be on next year's taxes. It's going to be a line item on next year's taxes for a tax credit. It would be just like if you had a child tax credit. It's coming off in that same realm. And your payment that you got this year was early payment for that credit next year. So you're going to see the line item on the taxes. You're going to fill out, yes, you should have gotten it, and then you already got it. That said, if you didn't get it, but then you end up qualifying for it next year, you'll still get it on next year's taxes. So, if last year's taxes were super good, but you've been creamed this year, because a lot of us have, it's still going to come out on next year's taxes. So that is all. The check that you got now is just an advanced payment on next year's taxes. The big question that isn't answered anywhere is what happens if you didn't deserve it this year. Your year this year was just a banner year. I don't know, you sold puzzles. It blows my mind that puzzles are sold out everywhere. But wouldn't you love to be a puzzle manufacturer because 2020 is like as good as the 1940s for you? If that's the case for you, what's going to happen when you go to do your taxes and you weren't supposed to get it and you got it? No one knows, because the bill that was signed didn't actually specify what should happen for anyone that was given a stimulus payment, but then on their 2020 taxes did not have the tax that they should have. It's a place that I would make sure that if the taxes decide that you owe it, that you can pay it. It'd be great if you didn't. That's what some people are saying. It is not in the bill. It's not written anywhere. So you may Google it and you may see that these people say you're not going to owe it. They are just guessing. And it is not a very happy place to be because I don't really know of any place on your taxes where the government just says, that's okay. So it's best if you can hold on to it. If you don't think that you were supposed to have it, you're having a big, huge year, that you can turn around and repay it if that's what it came down to next year. We're just going to have to wait and see. Okay. Yeah, and Gabby's saying the same thing. So she says, I'm on track to make more this year than last year, took on another job, so it'll be interesting. And yes, I think that is ideal, Gabby, that your stimulus money is just sitting in an account. That is exactly what you should do with it, because it's a safe place to stick it. It's great that it was there if you need it, but if you don't need it and they end up wanting it back, then you're in a position to not be in tears. And maybe it's going to be wonderful and you're going to get to keep it. But I think that that's a lot of wishful thinking, because that's just not usually how they work, guys. Miss J, does having a good credit score help to lower credit card interest rates if you call to lower the rate. It can actually help them be more willing to work with you, because the thing is, your credit score, it's just, all it is a huge like actuarial statistical risk assessor. That's what your credit score is. So the higher that number, the lower you are a risk to the bank. The lower your number, the higher you are a risk. So I want a higher credit score. The bank then sees, oh wow, this person, they're actually a pretty low risk. You're going to get a lower mortgage payment. You're going to get, they are going to be more willing to work with you on things because of that. So yes, keeping a good credit score, raising your credit score, it's all going to play out to help in the end. Is this a good time to invest in mutual funds and invest that stimulus money too? As Gabby was mentioning, you could, Gabby, go with some sort of like money market account. I will tell you, banks are not paying any interest right now. It's just getting worse and worse. And I don't know that if you wanted to invest it, and this wasn't necessarily your question, Gabby, but just to answer someone else's, I think the stock market is so volatile right now that if you wanted to take your stimulus money and invest it and then have it for next year, potentially that could work out for you, because you're talking about the whole rest of the year and hopefully things are going to quiet down. The hard part would be if things went back up and then you ended up owing some capital gains on top of that, because if I don't own the stocks for a certain amount of time, I'm going to end up paying a higher interest rate to sell them. So whatever route you want to go, and on that, in terms of stocks, mutual funds, they're all the same. So they're all going to have that same, if you don't own them long enough, you're going to end up getting kicked into having to owe more on those rates. So, and this is also a good time to point out that I am not a certified financial advisor. I'm just someone who enjoys taxes for some weird reason, and all of that other things, all the things that go along with it. And yes, you're right, Jessica. You're not going to get a 1099 on that stimulus check or claim it as income. It's not supposed to affect your adjusted gross income, but you are going to have to claim on a line that you got it, because it's a line for the credit and then a line for the early payment on the credit. The best way to explain this is actually a friend of ours that is pregnant right now. Anyone that's pregnant right now, the stimulus payments were paid on last year's taxes. But they've actually said that because it's a line item on next year's taxes, you'll then fill in how much you got. And if you actually earned more, your kid was born before December 31st, you better have that baby before December 31st if you are pregnant, you're going to get the $500 for that next child. So for this particular friend, she's got 2 that are born. She's pregnant with a third. She got the stimulus money for the 2 that are here. She will get another $500 off of next year's taxes. Line item, this one, saying how much you are supposed to get based on dependents and yourself. Next line, how much you did get, and then the difference coming off of next year's taxes. So not having to claim it as income, not having it a 1099, but still having to claim how much you did get on that stimulus. It is going to be a line item on the taxes, so across the board. Let's see, does your credit score affect ACA insurance? And now you're hitting me towards the end. So are you meaning health insurance? Your credit score is not usually factored into your health insurance rates at all. Now that health insurance, when it comes down to, they can't even give you a different rate based on what your gender is. They are not able to take in your credit score into that either, though it would be a great way to assess risk. That's why life insurance does it. That's why car insurance does it. If you keep a ton of debt and you're living a riskier lifestyle, they are going to charge you more money for that. But health insurance does not usually look into your credit score or even pull your credit score. It's not a ding on that at all. Oh, that's awesome. John says he's getting ready to pay off all my credit cards. That's a pretty sweet place to be, John. I still remember the day that I watched my father write a check for the last mortgage payment, and he was one very happy man. I have not had that day yet, but hopefully we keep making our one extra payment a year. Hopefully we'll have some extra that we can get into there too. Okay. So, oh, Wendy, I got it. So, with the stimulus, does it affect your, like, my husband was thinking you might have been meaning about insurance with the stimulus payments. Will it affect kind of whether or not you qualify for healthcare.gov and the possible amounts that are coming into that? No. So stimulus payments are still not going to count towards your adjusted gross income. So they will not affect whether or not you qualified for assistance through healthcare.gov or not. If you did qualify and then you're, like Gabby and having a banner year, that's going to affect you, but not the stimulus payment. So you would be good if that was your question too. John, great question. Does it hurt my credit score if I pay them all off? No, your credit score will not go down when you pay them all off. It'll be a fun day. What will affect your score in a small bit, John, is if you close some of them. Don't close the oldest, but if you close some of them, you'll see what's going to happen is that your credit availability goes down when I close some cards. So if I still have some debt over here, my credit to debt ratio is going to be affected. So what I would actually recommend is once you pay off those cards, as long as they don't have annual fees, just hold on to them for a little bit until you have no debt left. And then it really doesn't matter. If I have $10,000, or let's go huge. Let's say you have $60,000 available in credit cards right now, and you have debt of $10,000, but you pay it off. Well, a debt of 0 to a 10,000 credit card is the same ratio. It's still 0 to 10,000 versus 0 to 60,000. Doesn't really matter in that sense. But if I do close cards now, I reduce the amount of available credit, but I still have debt, that is going to raise your credit to debt ratio. So long story there. Don't close any of the accounts, even if they're paid off, until you've paid off all the debt. And then that shouldn't have really any effect. You'll see your score go up instead of going down at all. Hopefully that answers that one. Definitely though, if any of those cards have annual fees, don't end up paying that annual fee. Go ahead and nix any that have an annual fee. And hopefully that will help. So there you go, guys. I'm going to go ahead and end it. We went over today. This was a fun topic. I always enjoy getting out of our norm and getting to cover something different. I have not decided where we're going next week, but I will remind you, I mentioned this last week, I have it set up. So it is set under videos. If you go to our Facebook page and you look under videos, you'll see upcoming video. I already have it set up. This Saturday, 10 a.m., I'm going to do another live couponing workshop. So we're just going to go through everything from the basics all the way to drugstores. We'll start at 10. It will take 2 hours. That's how long they take. But I'll give you the download workbook that I give to everyone when I do in-person workshops. And we're just going to try to cover it all. So hopefully you can join me. It is going to be on the Southern Savers page. This is making my husband just probably have a small little conniption fit right now and saying that out loud. It is going to be on the Southern Savers page. It just failed to do it on an event last time. However, I will say this much. If you've always watched videos, but you don't necessarily follow me, I found a little button and I did click it for this workshop. So if you want to leave a comment on the workshop, you actually have to follow Southern Savers. And hopefully that is going to keep some of the crazy people that will end up in comments and whatnot out, so that as I teach a workshop, we can really get through all the information. I'm not saying any of you guys are crazy, but we definitely, usually when I first go live, we get some interesting ones that will pop in and they're only in there for a second. So hopefully requiring you guys to actually be a follower will nix some of just the spammy things that pop in, and we can just all live and follow along in the workshop. So make sure you're following. Make sure you go and you can actually click to get notifications, get reminders on that coupon workshop so you don't forget on Saturday morning. And hopefully if you're interested in learning how to save more, all the basics, all the way to drugstores, you can join in. If you can't, it will be saved and you can watch it later too. So I hope you guys have a great night. I will be back on tomorrow, probably around 3 or 4 tomorrow is what I'm thinking. And we will do all the drugstore deals like we did last week. I've already got all the pictures. So we will hop on and do drugstore deals live tomorrow afternoon. So you guys have a great night and I will see you again soon.